Hi, everyone. Today, let's talk about Home Depot and Walmart earnings. And we'll talk about what Biden said over the Ukraine-Russia war. Then, of course, we'll go over the charts. Then we'll go over my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at Walmart and Home Depot earnings, both of them did fairly well on earnings, but their guidance was extremely poor. You can see here the retail giants cautioned full year guidance, and that was a disappointment to some investors. Walmart did very well, easily topping expectations coming off of the holiday year, but like mentioned before, gave weaker guidance for the year ahead. Home Depot did similar, giving similar guidance, but they just barely beat their earnings, once again giving weak guidance for the forward year. Walmart mentioned that buyers are buying more necessities like groceries and light bulbs rather than big ticket items or discretionary items, which is something that we continue to talk about in terms of consumer staples versus consumer discretionary. People are moving over to those staples and not buying discretionary nearly as much, which is indicative of a potential upcoming recession. And this can continue to get worse if we do see inflation stay higher and interest rates stay higher as well. Mentioning here the potential for more interest rate hikes from the Federal Reserve. Walmart does highlight the fact that they are seeing more people with more money coming into Sam's Club and Walmart, and that 60% of their revenue comes from the grocery category, which is generally recession-proof, once again dipping into that consumer staples side of the economy. As for Home Depot, they tend to be on the more consumer discretionary side in terms of upgrading their homes. They do see decent flow from contractors doing business, but of course, new home sales has been decreasing for the last 12 months. Moving over to geopolitics just for a moment here, Joe Biden did go visit Ukraine and gave a speech there on the one-year anniversary of the Russian invasion. He reaffirmed NATO support and specifically U.S. support to the Ukraine, indicating that they will never win and that we will continue to give them support in terms of military aid. I mentioned the fact that Biden traveled 23 hours by plane and train to stand shoulder to shoulder in solidarity with the Ukrainian president. Obviously, this was pretty interesting and not something that we expected. But of course, Putin came out and spoke against it, saying that he will continue to fight and that they will not change their plans in the Ukraine. They plan to continue to fight and eventually take over the Ukraine. And I think this increase of rhetoric surrounding the Ukraine war is spooking the markets a little bit. Of course, we've been supporting the Ukraine, but in terms of the US president and Putin speaking directly against each other, it hasn't quite been that same way. I think a lot of people in the United States were thinking that the Ukrainian war might have been coming to an end, but that just doesn't seem to be the case at this point. It seems like things are ramping up, despite the fact that Russia is really losing their ability to fight a modern war, and that they may eventually actually crumble under the weight of this pretty difficult war in Ukraine. It's also worth noting that we did try to pressure China in terms of not supporting Russia and not purchasing oil or really anything from Russia nearly as much. Of course, China said they're going to do what they want, but that increased tension around the globe certainly seems to be spooking the markets at least a little bit. Moving over to Max Payne, just for the options, you can see here, huge amount of options still at 4,000 for Friday. Friday expiration does have 1 million options on it, which is quite a bit. And you can see a huge put to call ratio here, 2.68, ton of puts here in the market, meaning that the market is extremely bearish. We were very bearish going into the week. And of course, we've accelerated to the downside here, finishing below 400 here on the S&Ps. That was a big level. 400 did get breached. And you can see here, some people are making money on that. But it is interesting to see Max Payne all the way up at 409. So usually you would expect the markets to rally into that Max Payne zone where the market makers tend to make the most amount of money. And you can see how many more puts there are than calls. Definitely a ton of puts. You can see 400 is a huge level here. And how much more money there is to be made if the market moves to the downside by retail investors, or if it moves to the upside slightly. But really in this 405 to 411 zone, you would expect the market to finish generally within that zone where the market makers are going to make the most amount of money. Just keep that in mind as we continue to move down here. I do think we're going to move down at least a little bit more, but I don't think we're going to go too much lower here where 409 is going to be out of striking distance for the Friday close. and I would expect to close somewhere within that region for Friday. Moving over to the charts here, you can see it was a falling knife. I did think we might get a little bit of a perk up after that big green bar that we had on Friday. Thought we might come up and retest this 409 zone before getting a sell-off, and I was positioned for that, so I did take a little bit of a loss there. But as you can see, we did get a falling knife, and we came all the way down to this first trend line. If you're looking at the daily chart, it's not really the ultimate trend line. This is just kind of a sub-trend line, and we did come into this zone right at the 144 EMA on the 4-hour chart, which is very close to the 55-day EMA. It's worth noting that momentum on the daily chart still ticking very strongly to the downside. Similarly here on the 4-hour chart, strong negative momentum. Did get into oversold conditions just briefly here on the 4-hour chart. Certainly could go much lower, you never know. But this is a decent zone where you could see maybe some buyers start to come in here. We haven't had oversold conditions on the 4-hour chart for quite a while, going all the way back to mid-December here, which ended up being a decent bottoming formation. So something to watch if we do see a little bit of upward movement in the early session tomorrow. Maybe we're going to get some pullback to this trend line, maybe in the 402 zone. But realistically, I would expect it to fail there and that we would roll over to this more major trend line down at around 395. Remember, we do have FOMC minutes on Wednesday tomorrow, and that's definitely going to affect the markets quite a bit. And then below that, you can see we have that longer term trend line that we broke out of here. You can see sitting right at basically 392, very similar prices to that previous trend line. So we have this channel that we're creating. We did not test that high of the channel like we did here. And now we're selling off very dramatically here. If we do get through these two trend lines, then we're going to have to be looking to this most recent low here in December as our next support, which would be around 375. That would be a significant move down from where we are now. So really, we need to bounce here in the short term from about 392 if this uptrend is going to continue. Otherwise, we're looking at this to potentially be rolling over in the coming days. Moving over to the NASDAQ, similar thesis, not going to spend nearly as much time on it here, but you can see once again, sold off throughout the session after gapping down. Got down to that trend line that we were watching before. I assumed we were probably going to get to this level at some point today. Did not show a lot of strength after testing that level, meaning that maybe we get a short-term bounce and then a move lower. Looking at potentially around 288 as your next level of support. That is the longer-term trend line here on the NASDAQ as well. So 288, strong level of support. That would be at the same level as the 144 EMA here on the 4-hour chart. Did not get into oversold conditions the way the S&Ps did, so showing a little bit of strength relative to the S&Ps. That's pretty interesting. Home Depot is not a part of the NASDAQ, so potentially that's why the NASDAQ did a little bit better. Otherwise, 290 to 288 is your next level of support here on the daily chart as well. That would be a pretty significant push lower from where we are right now, but you can see the RSI is now crossing through the 50 line on the daily chart as well, indicating some much deeper lows to come. Moving over to the Russell and the Dow, not much to add here. Russell breaking down dramatically, got below the 189 level that we were watching, pushed very strongly through there. You would expect this to continue probably all the way down to 183, 184. This next level of support, we have a trend line in here at 182. So 184 to 182 zone of support for the Russell. Similarly here with the Dow, you have the 144 EMA and the 200 SMA sitting all the way down between 326 and 324, somewhere in that zone, maybe 323.50. That would be your next level of support, which coincides with this previous low here as a potential area for demand. Looking at the daily charts, you can see the Dow broke down well below the 50 level, breaking below the 50 level on RSI. Both daily charts pointing to more downside to come. If we do get below that next low here on the Dow, you're probably looking at 311. And on the Russell, if we do get below 182, then you're probably looking at probably 180 to 178 as your next zone. So those are two levels that I'm looking for on both of these charts. Moving over here to Apple and Tesla. Apple breaking below that midpoint that we were watching. So we have a double top here now, and we've broken below the midpoint, below the trend line. This definitely looks like we're going lower. Probably could test 145 to 146, the previous high here, or it could come all the way down to maybe 142 as your next level of support at the major trend line. That would also coincide with the 144 and 200 moving averages. You can see we're not oversold yet. Strong momentum to the downside on Apple. Looks very weak. Moving over to Tesla, just to try to hold up the markets here. Looks very strong. Not broken below the 193.50 level that we were watching. Still continues to hold this level. Did make a lower high. I thought maybe we get a third push to the high here, but it didn't quite happen. Big sell-off pressure. And if we do get below this most recent swing low, then we're expecting to get through that 193 level. And then there's many levels lower we could go here, but probably 180 would be the next level of support here on Tesla. But either way, it looks quite a bit stronger than pretty much everything else in the market right now. Moving over to the transports, you can see we were watching that trend line. We gapped through it and we moved all the way down to the 144 EMA here on the 4-hour chart. Didn't quite tag it, but we're right in that vicinity, sitting at 227. That was a zone that we were already watching going into the weekend here. And right now we are right at that zone. Not a decent level of support going back to this previous zone. It's kind of right in that center line. So that's interesting. You would expect this to come down and at least test these next lows somewhere around 223 to 225. That would be the zone of demand at this previous support level. So maybe a couple of dollars more of potential downside before we see at least a shorter term bounce, but definitely something to watch for. Looking at both of the momentums, you can see hourly momentum fading slightly, 4-hour momentum still building to the downside. Oversold on both charts here, potentially indicating some upside to come. But it is worth noting here on the hourly chart, you can see the way that these moving averages are rolling over. And they're getting very close to getting in line here on the transports on the hourly chart. On the 4-hour, you can see we have the 921 and 55 all in order here. And if this breaks below the 144 and the 200, that's going to look very bearish for the coming days. Moving over to consumer staples and consumer discretionary, you can see consumer staples continues to stay pretty strong, generally within this range. Consumer discretionary, however, did take out this previous low. This ended up being a retest of the trend line and then a gap down and sell off. So this looks much weaker here on discretionary versus staples. Obviously, that's factoring in the fact that Home Depot and Walmart are saying that consumer discretionary is not having the same kind of strength. And that's what we're seeing here now on the chart. So discretionary selling off, staples is holding steady. And that is what you would want to see if you expect this move to the downside to continue. People are holding their staples, which seem to do well, and discretionary selling off. And both of the indicators here are showing that. So above the 50 level on RSI for staples, well below here on discretionary, indicating that we have more downside to come. Moving over to semis, not much to say here. Basically the same as the other charts, both selling off very strongly. Price getting below all the moving averages here on the 4-hour chart, looking very weak, breaking out this previous trend that we had been watching. Getting very close to getting some moving averages here in line on the 4-hour chart. Momentum picking up to the downside, not oversold on the 4-hour chart. Certainly could find some support at 229. That's generally where I'm expecting to come. The low from this previous consolidation was about 230, so 229 to 231 is probably the area of demand where we could see a little bit of buying action come in, potentially here on semis. Moving over to yields, just looking at the daily chart here for both, you can see yields continue to go straight up. 2-year yield did not sell off at all like we thought that it might. It was showing some signs of overbought conditions, and it continues to show some signs of overbought conditions. Going higher here on RSI, getting very close to this most previous high at the 4.75 level. 10-year yield taking out this previous high and going all the way up towards 4. This breakout certainly could go much higher. We got past this previous low going back to October 28th. Now we're probably pushing back into this 4 to 4.25 zone from the most recent high. If that does continue, then we have to expect stocks are going to continue to move down. That is the trend line here at 420. It is worth noting that both of these are getting very close to overbought conditions, if not already, on the daily charts. So this has been a very strong move here for yields. But once again, they look very strong. And based on the macro environment, it seems like they're going to go higher. Moving over to the dollar, not much to add here. Had a huge sell-off on Friday, basically went flat on Monday. Obviously, the US markets were closed, so probably not a lot of volume here for the dollar. But it is kind of turning up here at the end of day today. You can see we had a big wick rejection at this previous high at 104.20. Went all the way back down to the 144 EMA here on the hourly chart, and then found very strong support at that level. You can see that coincided with multiple levels here in the recent past. Took out those lows and then rocketed right back up to the previous highs. And this definitely looks strong here going into the end of day and potentially into Wednesday when we do have those FOMC minutes. Overall, expecting the dollar to start pushing up again, maybe back up to this 104.40 level. And if we can hold above that level, then you would expect to be getting even higher, all the way up to maybe 104.80. That would be the trend line, where we would probably find some supply at that point. Otherwise, looking at the 4-hour MACD looks bullish. 1-hour MACD looks bullish. Both RSIs look bullish. Overall, looks like we're going higher on the dollar. Moving over to JNK just for a moment. This was pretty tricky, right? So we had that pretty strong day on Friday. Looked like we might get a little bit of a move higher on Tuesday. And that's kind of the way that I was trading it. But really, this is a downtrend. And this was a big fake out. Hit that trend line just for a moment here on the hourly chart. Gap down really strongly and moved much, much lower, getting all the way down to 89.60. This is a very, very low level. Got back into the zone like we talked about. But really, the support is going to be at 88.60. That's going to be the most recent low. And if we get anywhere near that level, there are some pretty strong levels down at maybe 87.80, 87.50 in this zone. Quite a strong level of support down here that you would expect. But right now, the trend has broken down and we're continuing to take out levels at a pretty fast rate. All the moving averages are to the upside, indicating that we are going to be moving down here, in my opinion. You can see the 4-hour RSI is in oversold conditions, and so is the daily, and so is the 1-hour. So that's interesting. But of course, if you jump up to the 1-day chart, you can see we're not quite oversold, and we could see a little bit more movement down back into this level. Moving over to the VIX here just for a moment. On the 1-hour and the 4-hour chart, you can see we gapped up huge, bounced off of this level, I guess, if you can call it that, gapped into the previous resistance and then pushed above it here in the after hours. This is definitely moving much higher here now. Certainly could come back in and retest this level as a potential zone of support. If we do get a little bit of a rally early in the session tomorrow, come in, find some support here in the VIX, right at this 2250 level, and then we push much, much higher from there, in my opinion. Looking at where we are in terms of the daily chart, looking at probably that 25 level, 2450 as the next level of resistance here on the VIX. Right now, this is definitely a bottoming formation, and looking for the VIX to start making some new highs, at least in the short term, similar to what we saw here where we had a bottom, a push up, a couple of retraces, but then we got all the way up back into that 34 range. That does seem to be the starting phases of what we're having here, which does mean equities should be moving lower over the short to medium term. Moving over to my accounts, you can see I took a pretty decent hit here, but not nearly as bad as the markets. The NASDAQ was down over 2% here today. You can see minus $7, which is pretty negative. I didn't take nearly as bad of a hit. Of course, I haven't really benefited from the rally, but it's nice to see a little bit of a smaller loss here. Pretty early in the session, I flipped my positions to bearish here, and you can see some covered puts. I actually sold some same-day puts for $296, but I did roll those out in time one day just to collect a little bit more credit here. You can see I made about $474 on my short stock position. If we do see a little bit of a rally, I'm pretty well covered by these short puts here. The market has to go all the way up to 298 for me to lose money there. And you can see I have some 299 calls, which I made some money on as well. So I repositioned myself fairly well to recoup some money throughout the midday. And right now, you really have to look bearish going into the future. Even if we get some shorter term pullbacks, you have to expect that those are going to be met with seller demand. You have to expect that those are going to be met with people getting out of their long positions and people jumping into short positions. Nothing goes straight down, so we might see some shorter term pullbacks, but like I said, I would expect those to be met with sellers and that we are going to move down at least into the midweek. Remember, later in the week, we do have a ton of put options, and max pain for the SPY is sitting at 408. So we might see a little bit of a retracement into the midweek, but I don't really think that's going to happen on Wednesday, especially with the FOMC minutes. I expect the FOMC minutes to be pretty hawkish, and that should be pretty bearish for the markets as well. Overall, bearish going into the rest of the week, but being weary of a potential rebound into that 408 zone for the S&Ps. Let me know down in the comments what you thought of the markets. Let me know down in the comments what you thought of Joe Biden going and visiting Ukraine. Is that showing support for the Ukraine, or is that stirring up potential tensions with us and Russia and China and making the situation worse? Retail, in terms of Walmart and Home Depot, continue to struggle, and that is going to weigh on the economy. So definitely let me know what you think of that. And like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.